Alright everyone, it is Monday. We're getting some volatility here on the charts, and today we're going to cover all of it. But before we do jump into the TA, I usually don't bring this up at the beginning of my videos, but if you guys could go ahead and hit that subscribe button, that would be awesome because we are almost at that magical 1,000 subscriber count. So I'd really appreciate it. If you do enjoy the video you're about to watch, make sure to hit that subscribe button to stay updated on the Bitcoin price action and learn how I do technical analysis, leverage trading, some more advanced stuff that most YouTubers just do not cover. And with that out of the way, let's go ahead and jump into the charts, starting off going over the S&P, which once again blasted off into all-time highs today, showing the overall strength in the markets. We do see an hourly bear div here, right? You can see it's a slight hourly bear div that we do have coming in here on the S&P, so that's something to be watching out for. I think we also got that on the 4-hour time frame as well, as you can see here, but it's very slight, right? The RSI is mainly at the same level, so this is more of like an exaggerated. But even though you do have this on your shorter term time frames, if we jump out here to the daily now, you can see we have clearly broken through any bearish divergences we had here on the daily time frame. On the weekly time frame, we could still be kind of forming one in here, so we'll be watching that. But what I really like to see here is on the monthly time frame, at least on our futures market on Black Bull, you can see this monthly bearish divergence, which has been a big warning sign for me, something that would signal a massive recession soon. This is something I've been being very cautious of. We have gone ahead and broken this to the upside. You can see a clear pierce through this trend of a macro monthly bearish divergence that goes all the way back to 2018. And the break of this, in my opinion, is going to capitulate a lot of bears, and I do expect us to rally up with haste here. But we still have 11 days on the month, so nothing is confirmed yet. We could easily swing fail these highs, start heading down here with haste, and that would actually get us back under this RSI trend on a monthly time frame. So we got to be watching out for that on the S&P. But we got higher waves here on Market Cipher, and the money flow is coming up swiftly. That is some thick money flow there. Not that it means too much, Market Cipher, it's whatever. But we go ahead, look at the weekly time frame. I mean, Market Cipher does look very bullish. So a lot of times when this money flow is thick like that, it does indicate a drastic move up is likely. And we do know Bitcoin is correlated with the stock market. So with this move up, you also saw a move up here on Bitcoin, and I fully do expect Bitcoin to continue up here. I still believe this was our low back here, and all this pullback was an 886 retracement, which we have been doing. We have talked about this, right? If we look back at when we had FOMC and CPI for the month, which would have been this range here, you can see Bitcoin went ahead, dropped down, and then retraced back up. Where did it retrace to? Well, it went right up to that 886 on the fibs before pulling back down. That is this level up here. And then where did it find support once it went ahead and fell back down? Well, that would have been right back at swing low, swing high, 886. You can see bounced off this level before, inevitably rolling over. We also saw when I took my long entry down here at the Pico lows, based on that information, I went ahead and put some limits at that 886 after we got this shorter term time frame, bullish order flow in here. So I went ahead, pulled fibs swing low, swing high in here, and you can see we found support on the 886 in here. So you can see Bitcoin has been respecting this 886 as its main support and resistance level here for the last couple of days and weeks, which is why this pullback we had last night does not surprise me at all, because if you pull fibs swing low, swing high, that lands you right at your 886, and it's fractaling very similar price action to what we've been having, in the previous days when it comes to our fib levels. And if you didn't know, this 886 down here is the mathematical level in which majority of your long positions will be stopped out of the market that placed higher up in the fib. So if you're placing entry in the golden pocket, a lot of traders put their stops behind the 786, inherently meaning a nice place for market makers to grab that liquidity while still holding the low. Where they would have their stops is that mathematical 886 level, and that's why we can see this level act as support and resistance, and why if you are putting in your stops after entering in on the golden pocket, I always recommend just put it right behind a lower low. What I do is 1.01 on fib. So if we go over here to the fib setting, you can see if I were to turn this on and go 1.01, that is where it's going to get you right on the fib. So I would go ahead and put my stop actually right there, so that way you're just behind the wick, so you don't get stopped out if price comes right to the wick and then bounces, and you're also saved from all of this noise within that 886. But that's just what I do. Go ahead and backtest this stuff yourself and figure out what fib levels you want to use for your own entries and exits according to your strategy. But after we did bounce off that 886, you saw price squeeze all the way up, breaking these highs back here, which was our previous day and week's point of control, as you can see right here. This is something we talked about in my last video, and it actually got a very nice pixel touch while I was editing the video, so that's a cool little thing that happened during last videos if you missed that. But we have gone ahead and swept this level to the upside, finding resistance near the value area high of that previous day's range, creating what in my opinion is some pretty weak highs. You can see both of these highs around the same level. It's building liquidity up there, likely to get grabbed, especially with the S&P doing what it is doing. I fully expect Bitcoin to once again already be bottomed and for this to fly on up here, and I actually expect this to flip back into support and for the whole macro trend to change and for these to hold as our macro lows. You'll notice on today's volume profile, it is also the weekly volume profile. So we are starting a new week, building that volume range, and we are starting to see us start flipping our current points of controls back into support, which is really good to see. Let's see if we can get over this value area high and flip that into support as well. But something we need to see is good supportive buyers in the order books, not just top longers. And currently right now, if we go over to our order flow, you can see there are a lot of top longers. But before we do talk about the order flow in this uptrend, what I'm seeing there, I wanted to talk about the lows that came in and how we could have identified this as a good low, which is something I haven't really talked about much on this channel, and that is going to be CVD divergences. So when we came down here, you saw price make a low at 65.94, and then you see price start making higher lows within here, whereas on your CVD you see lower lows on CVD. This is a bullish divergence because you have selling pressure getting absorbed by price. Why does price making higher highs and CVD making lower lows create a bullish divergence? Well, it's because CVD is your cumulative volume delta. It shows whether there are more shorts or longs. So if that is going down, that means more shorts are being opened at this level while price is making a higher low. And if price is making a higher low during that, that means that these shorts are getting absorbed. So we saw that happen right there. Price did go ahead and roll over, but it did not make a new low. This would have been an exaggerated CVD bullish divergence. We see lows of the same price here on Bitcoin, whereas your CVD continues to fall drastically, showing that there is still absorption of those short orders. And this certainly could have been one of the main confluences you used to enter in on that 886 if you were trying to get into a long at the lows. And then when we did in fact bounce off our lows, changing structure immediately out of the gates, you see very bullish order flow. You can see open interest goes up throughout here, CVD goes up, meaning longs are being opened. So you have nice bullish continuation off the lows there, but as trend continues up here, these few candles within here are not longs opening, these are shorts closing, which tells you it's not a good idea to place your long orders on top of this. You want to wait for a pullback to find those supportive buyers. But what do we see? Well, we see open interest flying up after a short squeeze, indicating that these longers at the top here are likely going to get trapped. Throughout this range here, we do see top longers opening their positions right into the highs before the reversal, which goes ahead and closes out these top longers. We then see after price comes back down, longs do not wait a second. They start opening positions right after the squeeze, right up here back at the highs, and what we see on order flow is similar to what we saw at these lows we were just talking about with a CVD divergence, but this time it is bearish. We see here at our highs a lower low on price, whereas the CVD is making higher lows. So longs are opening while price is making a lower low. That means those longs are getting absorbed. We can even see some of the absorption happening with some people on OKX and Binance taking out big short orders at these highs. Then of course we do see price roll over more violently this time, squeezing out more of those long positions. And finally, I do think we are seeing nice supportive bullish continuation on price. You can see higher lows on price with higher lows on CVD and open interest, which shows you longs are now on the right side of the market, and we no longer have those immediate bearish indicators on the charts. Of course, we're just looking at 5-minute candles here. None of this stuff is going to be a guarantee. We can of course roll back over once again, but it is nice to see that we're not seeing bearish order flow anymore. We had been talking about these funding rates and how we want these to go lower. You can see the premiums are more in the red than they were even at the lows back here, so that's really good to see. And we do see that the funding rate has dropped off a cliff after we did see this first high. So certainly we saw a lot of people opening those long positions, raising up the funding rate, but with that short-term time frame squeeze we had just covered, we do see the funding rate falling off a cliff, which is another bullish thing we can see here on the charts. Now I will say Bitcoin is still below the daily EMA, so I really want to see this reclaim. We only have 2 hours left on this daily candle. Historically, we don't really want to be breaking this daily EMA in a bull market, so either today or tomorrow, I really do want to see price recover this level and start back testing as support, which should give us clear skies to skyrocket all the way back up here to sweep, the poor highs that we have up here on the charts. We have a lot of big liquidity levels to the upside. As I've been saying, there is more topside liquidity than downside liquidity, especially after grabbing these lows. There's not really too much of a reason to squeeze down. Potentially grabbing this, right? That's definitely still a possibility, but with the S&P doing what it is doing, I really want to see Bitcoin just kind of squeeze up here, just rally with haste and send straight up to $74,000, $75,000. Still my base case. Nothing has changed when it comes to that. Real quickly, let's talk about Bitcoin dominance because it is coming back up. We did see altcoins fall harder than Bitcoin last night, and we are seeing Bitcoin rally harder than altcoins starting off the day, but we are back at this downtrend of lower highs here, and I would not be surprised to see resistance once again and for this to be our final top on Bitcoin before our beloved altcoin season finally happens. And we'll just have to wait and see how this is going to play out. Certainly it is taking longer than I had anticipated for those altcoins to start running. As you can imagine, the crypto space is different than it has ever been. With there just being so many more altcoins right now, it is diluting the entire altcoin ecosystem. And I'm sure, as you can imagine, with those Bitcoin ETFs that are out, we are seeing just more inflows overall going into specifically Bitcoin. And that's why we could see Bitcoin dominance just continue to be strong throughout the market here, even though we are in a time where we should be seeing altcoins rallying against Bitcoin. Like Bitcoin is trading sideways at the highs. You would expect altcoin season to already be happening, but we are at a different economic state with the Fed already having a hiking cycle, and now we're in a pausing cycle versus, in our previous bull markets, we had already had that cutting cycle, along with just the economy overall. Retail doesn't quite have as much money as they used to during COVID when everybody was given free money and stimulus checks. So we'll just continue to watch this, see if we do find resistance once again, and then possibly, we certainly could see the start of the altcoin season. And if we do look at total 3 on a cycle-to-cycle basis, this is around the time in 2021, if we are just that early in the cycle, where we are chopping around in here, still holding higher lows, which we have done, right? We're still holding the higher lows, and this is just the time capitulation range where we chop within here until finally we do start back testing this stuff into support, and that's where we do skyrocket up into that full-blown altcoin season, just like we did back in 2020 throughout this range right here, and we really could just be this early in the cycle. So we have potentially some really exciting times ahead of us. We still see the S&P just continuing to break up into price discovery, signaling that the bulls are still in control, and Bitcoin is potentially a beach ball underwater, getting ready to break out and squeeze through those $74,000, $75,000 levels. And that's where the true test is, and where peak euphoria comes back and risk on assets fly once again. And I do believe that is all coming very shortly here. We also have the Ethereum ETF coming out. So that ETF, along with the Fed cut, probably happening in September, likely becomes the catalyst for a massive summer rally after this long time capitulation range we've been in for crypto. So if you have any questions about anything I talked about, or just want to join the community for this channel, link to my Discord is in the description down below. I also have a partnership with BingX, which is one of my favorite exchanges. If you do use my link in this video description, you can get a bunch of deposit rewards, bonus vouchers up to $7,300 in USDT. So make sure to go check that out. That is a limited time offer. And with that being said, thank you all so much for watching, and I'll see you all in the next video.